Hi, welcome back to J Trading. I'm Jupiter. I'm back with another video. As we have seen in part 1, analyzing forex market, specifically we were analyzing Euro USD. So we have seen how we can take sniper entry just by using support and resistance and the candlesticks with huge wicks which are getting rejected from either support or resistance. So this way the two trades that we have seen. Now the next one is, since the market is trending upward, you can put a trend line over here indicating that the market is trending upward. So in case if the market breaks out of this trend line, you have to change your sentiment and look for sell opportunity. As we have said in part 1, if the market is trending upward, you trend with it looking for a buy opportunity, but if the market is trending downward, you trend with it looking for a sell opportunity. So since the market or the price broke out of this trend line, which was uptrend, now the market sentiment is changing to a bear market. So it will be trending downward and you will be looking for a sell opportunity. You'll be going with the trend downward. So the first thing you need to do is always spot highs and lows. So after breaking out of this trend line, we have a high here, we have structural high and we have structural low here. We can put a line over there like this. Always put line, not a box. In forex, I think it would be better if you use lines rather than boxes, because lines will be very accurate for you to tell where to take a sniper entry, either to buy or sell. So we have these two lines. This one is a support and this one is a resistance. So this structure, if you see closely, it looks like the market is trending upward inside a downward trend. So we can draw a trend line like this. So this trend line, it's a cute little trend line which indicates that the market is trending upward inside a huge lower trend. It is trending downward in the higher time frame, but in the lower time frame, if you go to 15 minutes or 5 minutes, the chart will be trending upward. So here at this level, we have a trend line, we have resistance here, we have a support here. So what you need to do is wait for the market to give you a confirmation. So the confirmation here will be breaking out of this trend line, the first confirmation. As I have told you, one confirmation is not enough to take a trade. So the first confirmation here is the market broke out of this trend line exactly at this level. So after breaking out of this trend line, what you need to do is draw lines which can act as sniper entry for you. Since this is a structural high, that cannot be a sniper entry for you. That may act as a stop loss, but for entry you need to look for another wicks. So if you see here, we have a bunch of candlesticks, small candlesticks with a lot of wicks. So we can draw a line over there connecting those wicks together. So when you draw a wick over there, market is getting rejected from these wicks multiple times. Since the market is getting rejected from these wicks multiple times, we can also add another line from this level, because we have another rejections, almost 3 rejections here. So between these two lines, that will be a sniper entry for you. You can take a sell position. The first confirmation was the market or the price breaking out of this trend line, and the second one will be for the market to come back and test these areas. So when the market comes back to these two areas, you can take a sell position there. Let's put a short position over there and wait for the market to go down. So the stop loss will be, for stop loss, you can put your stop loss just above this structural high, but I think that will be very far because we have another wick here. If you see this wick also can be a resistance. As I have told you, in forex, these kind of wicks, they have meaning. So this wick can be a resistance. So we can put our stop loss just above this wick, and the TP will be, the first TP will be this area exactly. So this area that we drew previously as a support, it can act as TP for us. So the first TP will be this one, take half of your position or maybe quarter of your position over here. That will be TP1, and the second TP will be just follow the market, or maybe this area here. After taking TP1 here, the market went back up, so you draw a line over here as a support, and that will be your TP2. So after taking this TP, you may move your stop loss maybe to entry or to TP1, and you can leave the position, or you can leave everything for the market to play by itself. Then the market went all the way down, so if you have waited, this all could be profit for you. Now let's move into another section. Now the point here is the market is trending downward. We got the first entry and the first TP. The second one will be waiting for the market to give us another structure. So whenever you see any type of structure or setup, that will be signal for you. So remember, we are looking for a sale opportunity. Now we have a low here, market bounced from this area, so we can draw a line over here as a support, and market reversed from this area, so we can draw a resistance over here like this. So this can be high, this can be low, then market formed another lower high. You see, it is lower than the first high. That indicates that buyers are weak. Buyers are not able to form another high from this previous high. The high is lower than the previous one. Then the other low here, it's lower than the previous low. We have the first low here, right? We have the first low here. The second low, it's lower than the first one. We have low, we have lower low. We have high, we have lower high. So this is an indication for you that the market is trending downward. It is still in a bear market. So now what you need to do is, after this confirmation, wait for the market to trend. So here you see we have a trend, we have a little trend inside a huge trend. The market is trending downward, but on the lower time frame it is trending upward. So we can draw a trend line here like this, connect this low here, rejection here, multiple rejections here. So after drawing this trend line, what you need to do is wait for the market to break out of this trend line. You're not gonna take a trade exactly when the market breaks out of a trend line. You need another confirmation, right? So the market broke out of this trend line, but how are we going to take a trade? What is our sniper entry? So for the sniper entry, remember, go back a little bit and look for wicks. As I have told you many times, look for a wick. So we have a wick here, huge wick, so we can draw a line over there. At the end of that wick, just draw horizontal line, then zoom in. So when you zoom in, the price broke out of the trend line, came back to this exact area, and this candlestick, you see this candlestick, right? So this candlestick is for you an entry, because this candle, it got rejected from this resistance area with a huge wick. So immediately when this candlestick closes, you take a short position over there like this after that candlestick closes. So now what about the stop loss? A stop loss will be, for stop loss also, look for a wick. This can be a stop loss area, but since it is too far, come a little bit down, and you see these wicks, 2 wicks, they got rejected from exactly the same level. Since they are at the same level, we can move this area, we can move this resistance a little bit down like this, and move our stop loss just above this horizontal line. Then what about the TP? So the first TP will be, our entry is here exactly when this candlestick closes. So after that candlestick closes, we took an entry here. Our stop loss is just above these wicks. The first TP will be this area. Since these 2 wicks, I hope you see these 2 wicks, they got rejected from the trend line, so we can draw a support over there. This will be a demand area, so the market comes back down to this area, that will be TP, and the second TP will be the lowest part of this structure, and this one is the TP for you. So you can pull this one down, voila, you have TP1 hit, TP2 hit with a small stop loss. You are risking a small portion of your portfolio to make a lot or a huge amount of money. So I hope you got my point. There is a lot about this. I mean, I'm trying to explain everything briefly in these few minutes, but I hope you will get the point. All you need to do is spot highs and lows, draw trend lines, draw support and resistance, then you will get sniper entry. So I'll come up with another videos with more explanation. You don't need to worry. If you are new to the channel, consider subscribing, because you will miss the contents like this if you're not subscribed. Plus put thumbs up and turn on the notification bell so you can get notified when we upload new videos. So I'll see you in the next videos. Adios.